I am always amazed with how ants work as a team. They carry huge objects and make sure they achieve their goals, and also reduce the burden of a single ant. Mutual fund also works in the same ideology. A fund manager pulls in money from various investors and invest in or buy securities such as stocks, bonds, and etc. Well, when it's fund manager, you can be certain that it's safe. But why are people afraid, or why do people fear to invest in mutual fund and rather think of the other alternatives like as fixed deposit, recurring deposit, or even leaving their money in savings account? The answer is safety. The question in investor's mind is it safe to invest in mutual funds? Hi, my name is Tejesh and I am from MyWay Wealth. Today we are talking about mutual funds and if it is safe to invest in it. So the first factor we're going to talk about is diversifying your investment. Investing in mutual funds, it's important that you diversify your portfolio in different investors. So for example, you have 40,000 rupees with you. It is good, or it is mandated, that if you invest 10,000 in different mutual funds such as different stocks, bonds, or other commodities, so that in future it would also diversify the risk if it ever arises. The next factor is reduce risk. Mutual fund investments are subjected to market risks. Please read the instructions carefully before investing. Well, how does it reduce risk? Well, it's simple. You are not going to buy or sell stocks in front of the company, right? You have fund managers who are experts and who have a financial understanding of how much and how to invest in your portfolio by understanding your horizon or the investment horizon. A fund manager makes sure that you invest only in those investments which are well performed and also that suits your investment, and at the same time which gives you a higher return than the bank fixed deposits. Inflation beating returns. This is one of the reasons why I say you must invest in mutual funds, because assume you have invested in a fixed deposit in a predetermined rate, and when there is inflation you would not be able to beat it. Whereas in mutual funds you will have inflation rate up to 12 to 8%, and in a predetermined period of last 10 years the inflation rate is somewhere about 4%, in which you can clearly see that mutual funds are inflation beating returns, wherein you get higher returns compared to fixed deposits. And the next factor is fund for every individual. Mutual fund gives an opportunity to the fund managers to make sure that every individual is unique and their priorities and their risk appetite is also different. So the fund manager would accordingly recommend a fund wherein the customer or the investor is ready to invest in particular debt and equity. So if the investor is ready to take a big fund or a greater risk for greater return, he would invest in about 75% in debt and 25% in equity. So these ratios can vary from person to person. And also the next factor is tax benefit. Mutual fund gives a wide variety of tax benefits, wherein if you invest in ELSS, you would straight away get a tax exemption of 1.5 lakhs under the section 80C. And also if you invest in NPS, you would get a tax waiver or a tax deduction of 1.5 lakhs under 80C, and also 50,000 under 80CCD 1B section. Then what are you waiting for? Go ahead and install MyWay Wealth app in your mobile phones and start investing in mutual funds. Thank you.